Let's get right into today's market update. Yes, the stock market is pulling back, big tech is under pressure, but let me clearly say this. I'm not going to panic, and I don't think you should either. As long term investors, we have to realize that this is part of the process. Things are going to happen that impact us, the stock market, the economy heavily. And this is when we have to stay disciplined. Focus on the fundamentals of the companies that we have incorporated into our portfolios. Have an understanding of why is the stock market dropping, and not let headlines like these shake us out of good positions. We see here that the Dow has dropped 600 points. As of the time that I'm recording, all three of the indices, the Dow, NASDAQ, and S&P, are all down 1 to nearly 2%. The New York Times headline is investors are losing patience with the Iran war. So my goal right now is to understand what is going on with the market so that I'm leaving emotion out of it and sticking to my plan when it comes to building my portfolio and evaluating the positions that I already have in place. Okay, I've never pulled this up before, but this gives us the live price of oil. It says every 5 minutes. Why does this matter? Oil prices over $98 leads to higher transportation costs, production costs, and eventually everything is going to go up, which will lead to inflation. As I've already mentioned, we have this tension going on in the Middle East right now, and the stock market does not like uncertainty. The potential risk, not knowing what's coming next, is enough to move the stock market. Another big factor is investor sentiment. Investors could be getting cautious, wanting to take profits on positions where they can, pulling back, shying away from risk. So all three of these things are hitting the stock market hard. We're seeing this in our portfolios, the impact of everything that's currently going on. Now, let's take a look at some big tech names, 4 of which I hold in my portfolio and are in the top 5 when it comes to the heat list. These companies with these large market caps are also leading, heavily weighted in my ETFs and mutual funds. So when companies like we're about to take a look at drop, your ETFs are going to feel it too. Okay, taking a look at a few companies on the day. Currently, market is still open. Meta is down over 4%. They are under huge pressure right now after a recent court ruling that has added another layer of uncertainty. So Meta Platforms stock is near its 1-year low right now. We're seeing headlines about the court ruling, layoffs to shift spending towards AI, as well as a $10 billion investment into an AI data center. But in a recent ruling, a jury has ordered Meta to pay $375 million after finding the company liable for misleading the public about child safety. The state of New Mexico is claiming that Facebook and Instagram, different Meta platforms, failed to protect minors from predators and explicit content. And there's also a case against Meta as well as YouTube for designing addictive features that harm young users' mental health. In that case, Meta was ordered to pay $6 million. I changed the chart to the 5-day. Meta's down 13%, erasing over $100 billion in market cap from the company in a short amount of time. Even though Meta has stated that they disagree with the verdicts and plan to appeal, and the amounts that they have to pay may be seen to some as small for a $1 trillion company, it still makes investors wary about the long-term costs and potential issues and cases that may come up against them in the future. Let's move on to Nvidia. Also down on the day, nearly 2% right now. Nvidia, the largest company in the US, is definitely an industry leader, but their success depends on companies' AI spending. So if companies slow down, Nvidia is going to feel it first. We're seeing some volatility right now, but definitely a long-term hold when it comes to my portfolio. Nvidia holds over 90% of the market share when it comes to data center GPUs. It has a market cap of over $4 trillion. Their revenue has increased year over year, and they're still on track to continue. So, a leader when it comes to several of the funds that I'm invested into, but one that I wanted additional exposure to. Micron. This is the one company that I do not hold a position in when it comes to my individual stocks. This company is tied to memory chips, data center, and AI demand. It tends to move with those semiconductor companies, but unlike Nvidia, that's down about 2% today, Micron is slightly up 0.5%. Now, onto Microsoft, one that has definitely had some huge swings over the last year. It's currently down about 2% on the day, but we're getting rather close to the 52-week low for this company, which is $344.79. Current stock price, $359. And the 52-week high when it comes to Microsoft is $555. This is a company that has also been focusing on heavy AI spending. They have promising products like Copilot, but investors are ready to see the spending today turn into revenue, and it's just not coming quickly enough. But while the investor sentiment is the way it is, while big tech is having a pullback, this is one that I'm building on. Last up, let's take a quick look at Tesla, down nearly 3% on the day. And when companies drop below certain levels, for Tesla, for example, it would be around that $400 mark. It can bring some shareholders to their breaking point, triggering selling if they're not focused on holding this company for the long term, thinking about the advancements that they're striving to make as far as their autonomous vehicles, robotics, even their involvement with SpaceX. This has always been a more volatile investment when it comes to my portfolio, but I definitely put in the work to build this one up when it was having other pullbacks in the past. I'm still up about 60% when it comes to my position, but I've had huge swings, being up well over 100% and now significantly below, but holding for the long term. So we have to remember that wealth is built in the red. And even though our portfolios might be down, not just on the day, but as a whole, if it's a newer position that you've added, I'm staying in tune with the news and what's going on and realizing that these red days are opportunities when it comes to my journey to build wealth. Now, of course, investing does carry risk, and it matters what you're incorporating into your portfolio. Not everything recovers. That's why you have to have an understanding of the fundamentals, of the forward guidance of these companies, especially when it comes to individual stocks. You have less risk when you focus on those funds that give you exposure to hundreds, sometimes even thousands of investments in that one basket that rebalance for you. But I'm doing a mix of both. So I have to pay attention to those individual stocks and realize why certain funds are also pulling back. These are the times when patience and discipline matter the most. Let me know in the comments, are you a person that just consistently invests the same amount, or do you buy the dip and go more heavily when you see opportunities? Share your strategy, how you're going about building wealth for the long term. And I hope you come back to continue to share in my journey to invest, save, as well as stay out of debt. I'm Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell. Check out my referral links for the MooMoo Investing app. Click on that link, fund your account. You'll get 8.1% APY on your uninvested cash for the first 3 months. Free stock, as well as other perks. Check out all of my referral links. There are many ways that you can support the channel. Thanks for watching. Okay, bye.